Hello and welcome to Business at Citywatch. This is Michael. I'm going to be talking with Kenny Dettman, and one of the things we're going to talk about, which I think might be of importance to you, is the employee retention credit. I remind those of you who are listening to us to please like and or give an opinion with regard to this wherever you happen to receive your podcast. We'd be very appreciative of that. I should say that Kenny is a CPA and does handle employee retention credit cases exclusively. And I'm going to talk a little bit about that, but first tell me about yourself. You're a CPA. How long have you been in this profession, and how did you wind up handling this sort of thing?
I've been a CPA, a tax advisor, for close to 15 years. I really cut my teeth working with businesses and individual and income tax advisory. I work with a large firm based out of New York. My office was in Miami, Florida, and I was with them for just under 15 years. I made partner there, but got heavily involved with the employee retention credit, basically because most of my clients were private equity portfolio companies not eligible for the PPP. And when the ERC originally came out, you had to choose one or the other. So businesses that weren't eligible for the PPP were the real early candidates for the ERC. And I saw an opportunity to break off from my much larger firm to start Easy ERC, sort of the middle to the late of 2021. And today we are close to 50 professionals. We're based out of Fort Lauderdale, Florida. And as you mentioned, we are exclusively working on the employee retention credit. I haven't really looked at an income tax matter in the last year, and I'm not missing it. And I think there'll be work up until the very end of the expiration of the program.
Sounds terrific. Now that we've laid the groundwork a little bit, I think we'll take a quick break. When we come back, we will talk about the employee retention credit and a few other things, and we'll do that right after this. Citywatch on the Air, heard locally and worldwide on iHeartRadio.com, takes you through the ins and outs of business, exactly what your business needs to showcase your product or service. And we can do it for as little as $10 a week. If you don't believe me, text PROVE IT to 310-291-2790. That's PROVE IT to 310-291-2790. Okay, we are back with Kenny Dettman, and we're talking about the employee retention credit, which is on everybody's minds right now. Before we talk about the credit itself, let's talk about employers and how they qualify and how they don't qualify. One of the few things we mentioned is that there's no limit, if I understand you correctly, with regard to how long the employer has to be in business, and there's no limit as regard to their PPP money that they might have received. And basically the number of employees doesn't matter that much either. Have I covered all that right?
Somewhat. So the employee retention credit has different rules depending on which year you're looking at. There's a credit available in 2020. It's up to $5,000 per employee. And really, in order to qualify for that credit in full, you're going to have under 100 full-time employees, and you're always using 2019 as your testing period. So much like the PPP, you sort of looked at 2019 as your pre-COVID control period. So the 2020 credit is best suited for smaller employers, sub 100 full-time employers. But the credit got dramatically expanded in December of 2020 with the Consolidated Appropriations Act. That moved the $5,000 credit that applied in 2020 to a $21,000 credit in 2021. So you'll often see advertisers saying, "Oh, we'll get you up to $26,000." That $26,000 is allocated $5,000 in 2020 and $21,000 in 2021. The other nice thing about the 2021 credit, they moved that 100 full-time employee test up to 500 employees. So much larger employers can qualify in full for the 2021 credit. And obviously, the credit is much larger in 2021. There is a credit available to employers over 500 employees, but it's limited to wages paid to employees while they weren't working. But there is a credit available. It's much, much smaller.
Okay, now you hear about the horror stories from employers who say things like, well, I applied for this and I couldn't get it and they refused to let me have it and things like that. Is that because of the year that they're qualifying from or trying to qualify from, or how do they get denied, I guess is what I'm asking.
It's usually their CPA that's telling not eligible. Most CPAs are comfortable with tests that are grounded in accounting. So there are two ways to be eligible. So, back to your first question, you have to have W-2 wages. They have to be paid somewhere between March 12th of 2020 through September 30th of 2021, and those wages couldn't have been paid for with the PPP fund. So you can take a PPP loan and qualify for the employee retention credit, but you can't take a credit that was paid for with PPP funds. So first prerequisite, you have to have wages across that period, but those wages have to land in a period of time where you were either suffering a financial statement impact, had to have a decline in gross receipts. That was a 50% quarter-over-quarter decline for the purpose of the 2020 test. That softened a bit. It moved to a 20% quarter-over-quarter decline using quarters in 2021 against 2019. So it was a less significant financial statement impact test or a gross receipts test. But there is a second test, and that is a purely facts and circumstances-based test. It looks for a business interruption as a result of a COVID-19 executive order. That's where most CPAs that are focusing on income tax or pure accounting find themselves uncomfortable. So a lot of what you're hearing out there of, we don't qualify, is based on a business owner going to their CPA and their CPA saying, well, you didn't have the financial impact, you don't qualify for the credit. There is another test out there, and that test is a lot more complicated, and that's why service providers like ours exist, to fill that gap for the employers that are being denied eligibility on the financial statement test, but that were eligible under this concept of a business interruption.
Okay, now I have a couple of questions in regard to business interruption and employees, amount of employees, but let me break and come back, and I'll ask that after that. So we'll be right back after this. Citywatch on the Air, heard locally and worldwide on iHeartRadio.com, takes you through the ins and outs of business, exactly what your business needs to showcase your product or service. And we can do it for as little as $10 a week. If you don't believe me, text PROVE IT to 310-291-2790. That's PROVE IT to 310-291-2790. Okay, we're back with Kenny Dettman, and we've been talking about the employee retention credit for those of you who haven't been with us from the beginning, although I know that there are a few of you that are or haven't been. Before we went to break, I was talking about the amount of employees that were actually retained during that. Does this pertain to specific employees, or is this employee count? In other words, if you started with 100 and you still have 100, do you qualify, or do they have to be the same people that you might have let go during, or might have quit during that? You know what I mean?
That's a great question. It's always easiest to explain the employee retention credit by comparing and contrasting to the PPP. And what you're describing there was a test that most employers taking a PPP loan had to pass. So they basically had to prove they retained a sufficient number of employees. The employee retention credit, although it is called the retention credit, you can absolutely reduce your workforce and still qualify for the credit on wages paid to employees that existed at the moment in time you were eligible. So if you started with 100 employees, and let's say you had 100 employees in 2019, and then you reduce that workforce to 50 employees, well, you're only going to be taking the credit on the wages paid to those 50 employees. So had you retained the other 50, sure, there would have been a credit available to them, but likely, you reduced your employee count to basically meet the needs of the business.
Now, it has to be the same employees. In other words, you can't get rid of 50 employees and then hire another 50 and then try and claim the benefit on the new 100 that you have, right?
No, you actually can. One of the objectives is simple. So, in a perfect world, Congress would have passed a law that required you to sort of keep the pre-COVID employees on the payroll, but you don't have to get that to that level of granularity and tracking and tracing, which employees pre-existed COVID and which were continually be paid during COVID.
Okay, now for those who didn't catch the first part of this, what is the actual amount per employee that you can claim?
The amount is up to $26,000 per employee. However, to get to $26,000, you kind of have to hit what we call the holy grail of eligibility. You have to have had either of those financial statement tests met, so a gross receipts decline test met, or you'd have to meet this concept of a business interruption for the entirety of the period from March 13th through March 13th, 2020 through September 30th of 2021, and you have to have pretty well-paid employees to get to that $26,000 cap. The way the credit functions is it is in 2020, a 50 cents on the dollar credit on wages paid to employees in 2020, and to get to $5,000, you have to pay obviously $10,000 of wages to that employee during the 2020 period. When you move to 2021, it's a quarterly test, and it's a 70 cents on the dollar credit. So in order to get to $21,000 of the maximum credit that exists in 2021, you'd have to pay an employee $30,000 across the first 3 quarters of 2021. So in order to get to the cap, you'd have to have eligibility across that entire period. And considering that, your PPP loans were going to fund some of the employees' wages across that period, you're usually looking at $50,000-$60,000 of annual W-2 comp to get to that cap. In most cases, we're seeing employers claim somewhere between $10,000 and $12,500 in terms of the total credit, which, looking at an employer with 10 employees, that's $100,000 to $125,000 of credit. So, maybe it's not the $26,000 that somebody was advertising in your inbox that you were going to get to claim, but it's not a bad price to get, this range of $10,000 to $12,500.
Certainly something is better than nothing. I get what you're saying. Let me do this. Let me break one last time. Citywatch on the Air, heard locally and worldwide on iHeartRadio.com, takes you through the ins and outs of business. Exactly what your business needs to showcase your product or service. And we can do it for as little as $10 a week. If you don't believe me, text PROVE IT to 310-291-2790. That's PROVE IT to 310-291-2790. Okay, we are back in the last few minutes with Kenny Dettman. And tell me a little bit about you personally. I know we talked about you at the very beginning. You're a CPA. You've been doing this exclusively for the last year. If people want to ask you questions specifically or hire you or get in touch with you, how would they do that?
The best way is to submit a very brief questionnaire on our website, www.easy-erc.com.
Sounds good. I thank you so much, Kenny Dettman. And we've been talking about the employee retention credit with a very confident CPA who has been very gracious with us today. And I thank you, sir. And remind all of you who are listening to believe in yourself. If you don't, no one else will. And we will talk to you next time.